Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 16th, 2010. Well, just a little bit after 2 o'clock, 2 p.m. Eastern Time, the markets are awaiting the Federal Reserve. Notice what the market has done now over the last 2 hours. Initially, we gapped higher only to sell off into key support right here, also gap fill, the key trend line sloping up, the key trend line from previous days pivot in the middle of the day highs. Ultimately, that caused a nice spike up on the markets as the dollar collapsed, but over the last hour or two, the markets have started to fall in, and this is ahead of the Federal Reserve, folks. We are waiting now, 2:15 in 5 minutes. The Federal Reserve will release their statement on interest rates. Market again waits for it. Look at how we're right on support. Amazing how support and resistance trend lines work. This line worked perfectly right here with gap fill. Now it's working again as support right here on the charts going into this Federal Reserve meeting. The spiders are fractionally higher today, up 38 cents. We were up much more, as much as 65 to 70 cents, but the market since then has really come in pretty dramatically. The Dow is up just 4 points on the day. NASDAQ is just up 7 points, and the S&P 500 is just up 3. So a very minor flattish day, and look at the bounce that you're getting off key support, guys. These lines are literally master levels that the hedge funds and the money managers use out there. We have them here for you guys as you can continue to watch and see how they react. But notice how that market so quickly bounces off that key support. Now, your double tops, your double bottoms, what are the levels that you need to be watching for today? Clear as a bell, take a look at this. Your double top from today, if we do happen to spike up on the Federal Reserve announcement, this is where you're looking for the market to go. Back to the double top, 116.25 on the SPY. Lows of the day, this is your key line. This trend line, if you can break this trend line, you should go down here to the lows of the day. Notice how this is the low here. Also notice how the 50 moving average has sloped up into that pink trend line. So this tells you this is a definite scalping opportunity today should we hit that level. And again, that level is at around 115.55, 115. 60 or so, give or take a couple pennies. That's also the low of the day today. Essentially 115.50 was the low of the day. Also gap fill, that's another reason why we bounced. All these technical reasons signaling why the market does exactly what it does, just like the bounce is coming in here off of this key trend line that's sloping to the upside. And again, this key trend line literally comes from days ago, and what you can see if you go back multiple days to last Friday and last Thursday and even last Wednesday, take a look. You take this low, connect it to this close low, low. That's the same line now that we're now coming into, hitting right up here on the charts. And again, it just shows you how important trend line analysis is and how important it is for you to understand it and utilize it to your advantage. Because while this is an intraday chart, it works on all time frames, daily, weekly, monthly. If you're a swing trader, if you're an investor, if you're a day trader, it doesn't matter. Any chart you follow on any time frame, this will apply. You have to learn how to do it bottom line. Now, a couple other things to go over, folks. As the market bounces up ahead of the Federal Reserve, we have 2 minutes. Federal Reserve decision is imminent now. Again, the market's getting a little bit of a bounce up. Dow is now up about 5-6 points and continuing to bounce a little bit on the higher side here. And as we bounce up, watch this green trend line, watch the 20, and ultimately watch this double top. We're already bouncing pretty solid bounce here. This is a big-time bounce now, guys. Look at the size of this bounce as it looks like we are. There it is, unchanged, down 0.25%. Again, that's not a surprise. Watch the first move here. This is live action as we continue to watch this market here. Initially, nice pop-up. This is the first move, though. You have to be patient. This would be your double top possibility up here to see if you come into that double top. Now you're starting to pull back. See, do we sell off all the way back down? If we sell off, do we take out this pink trend line? So again, Federal Reserve coming out here. Believe it or not, this is a little early, a couple minutes early today, and that is usually a little bit of a surprise as they're usually a little bit late sometimes on their announcement. Nonetheless, a good surge here as the market's rocketing higher. It's all about their key statements here. FOMC keeps exceptionally low language in latest statements. So again, they're continuing to talk the dollar down. That means the dollar is generally weak. Doesn't mean the market's going to hold up here, but right now they are bouncing nicely. FOMC keeps rate at 0 to 2.25 range, so that continues to be the case. And again, I'm just scanning through, folks, and giving you guys the latest updates live here. Let's take a look at the dollar. Quickly jump to the dollar. The dollar, take a look at this. Look at the drop on the dollar. Notice how it's opposite of what the markets are doing. So the markets are jumping up here, and the dollar is is dropping down. Now that's key, folks, because if the dollar bounces up, the markets will reverse to the downside. The markets literally go the opposite way of the dollar. You can see it so clearly here. We just saw that big spike on the spiders. Look at the drop on the dollar, and that's because the Federal Reserve purposely is trying to keep the dollar weak because they know that they can keep the market up by keeping the dollar weak. It's that simple, folks. It literally is that simple as the markets are jumping dramatically here. Let's get a quick quote on the indexes. I want to keep you guys appraised of all that. All of a sudden, Dow up 21 points. Now, it's not a huge gain by any stretch. I mean, Dow's up 21 points, Nasdaq's up 10, S&P's up 5, but what you have to continue to watch here is support. The dollar has support on the UUP at 23.40, and it looks like we're going to that low right now at 23.40 here, just 1 penny off of it, and continuing to fluctuate. Let's go back to the SPY, which continues to surge as long as the dollar stays this weak. Look at the spiders coming up to this double top. You're now in a double top range of near-term resistance. If you get through this resistance at 116.25 or so, you're looking at 116.35. That will be the next key level of resistance on the charts. So the SPY, again, nice surge here. Again, this is all on the back of the dollar getting smoked as the Federal Reserve continues to basically talk the dollar down. That keeps the markets propped up. FOMC remaining mortgage security purchases near completion. All right, so they're coming to an end there. Vote was 9-10 in latest policy action against Casey's Honig dissension. All right, so one person dissented there, voting for a different policy than what they are doing. Dollar again coming crashing down here. That's causing the markets to trade near the highs of the day. Now, again, markets are starting to come in here, and that, again, we have to keep an eye on the dollar. This is the initial move, and one thing I tell my traders in the chat room is that the initial move can sometimes be false because people have to digest what the Federal Reserve is saying and read into it. Are they staying with a very, very low monetary policy because the economy is very scary right now and weak, and the markets don't understand that, and the Wall Street, again, hasn't factored that in? Or are they staying with it to make sure that everything gets back on track? Just like if they came out and started raising rates, you might say to yourself, all right, well, that's negative and keeps the dollar higher or pushes the dollar higher, but in tune with that, does it possibly signal that the economy is very, very strong? So there's a lot of different ways to interpret that, and that's why the initial move, you have to be careful. I'm a big believer in never trading the Federal Reserve first move. You want to let it kind of figure itself out, consolidate, and then look for the next trade. And you can see right away, look at this pullback coming in on the spiders. Let's take a look at the dollar. Dollar again, look at the bounce on the dollar. I mean, huge bounce on the dollar here. What are we seeing in the spiders? Spiders coming right back in. Now, again, you're still up pretty nicely now. You're still about 30 cents higher than where we were prior to the meeting, but in any case, that's a huge thing. Look at the volume on the dollar right here. Huge volume coming out. Let's take a look at the spiders again to just get a figure in on the charts. You can see we're off the highs now, although still pretty solid gains across the board on the spiders, up 58 cents now. And again, doing a quick check of the indexes. Let's keep an eye on that. Dow is up 18 points, and NASDAQ up 9, S&P up 5. So again, not too far off those recent highs, but nonetheless a good pullback. Now, something interesting to note here, folks. Take a look at Exxon. Exxon is only up 12 cents today. Very, very weak stock. Some of the leaders today remain weak. Exxon is weak. Apple Computer, which is getting a surge here, has been generally weak considering what it's doing. Look at this trend line on Apple Computer here. Take this low pivot right here, all right? And what you want to do is just draw that in, and look at that. How perfect is that? If this breaks on Apple, folks, you're going right to this 50 and possibly down to this level down here. There's a lot of key technical analysis tools you want to be aware of and understand, and that's why I encourage you to join the Research Center at InTheMoneyStocks.com, because we're going to give you the guidance, we're going to give you the calls, we're going to give you the key analysis and the education all in one for $49.99 a month. In any case, folks, keep an eye on this market. Let's flip back to the spiders, see exactly what's going on. Spiders, again, off the highs a little bit, came to right inside this double top area, right up in this range up here, and that's again where we're stalling out, starting to pull back a little bit more as we come back in. Watch to see as the volume, again, huge volume increase. Look at the size of that candle, biggest candle of the day here on the FOMC, just in the last 5 minutes really, that all that volume came in the market. Spiders coming back underneath 116 or back to the 116 level. We'll see again. I'm going to do a whole analysis in my nightly video. I'll keep you guys posted, and again, join the Research Center. That's 40-minute video tonight I will be publishing on the key calls, education, analysis of this call here with the Federal Reserve. Nice pullback in the spiders, folks. Talk to you then.